We are talking about some things that affects many families across the UK, especially young people who are trying to start their careers. Over the past 3 years, Britain has a sharp rise in the minimum wage for young workers. At the same time, unemployment among 18 to 24 years old has gone up. A senior policymaker at the Bank of England, Catherine Mann, has suggested there may be a link between these two trends. So that what is really happening? Is the higher minimum wage helping young workers, or is it making it harder for them to find jobs? We often hear that rising a minimum wage is good news for workers. It means more money in their pockets and better living standards. But now we are hearing that young unemployment has gone up to 13.7% compared to 10.2% 3 years ago. So let me ask you, do you think the sharp rise in minimum wage for young people is directly linked to this increase in unemployment?
There appears to be a connection, and that is what Catherine Mann from the Bank of England is pointing out. Over the last 3 years, wages for younger workers have increased quite sharply. For example, the minimum wage for 21 to 22-year-olds has risen by 33%. For 18 to 20-year-olds, it has risen by 46%. That is a very big jump in a short period of time. When wages go up quickly, employers have to pay more for each worker. For big companies, this may not be a huge problem. But for small businesses, especially in retail, hospitality, and service jobs where many young people work, higher wage costs can make it harder to hire as many staff as before. So what can happen is that businesses reduce the number of new jobs they offer. They may cut hours or delay hiring. This does not mean that raising wages is wrong, but it shows that big changes can sometimes have side effects. In this case, higher pay may have made it more expensive to employ young workers, which could partly explain why unemployment in that age group has increased. According to Catherine.
Now, some people might say that youth unemployment is always a warning sign. They might think it shows that the whole labor market is about to get worse. But Catherine Mann said we should be careful with that storyline. So, is youth unemployment really a sign of a bigger economic problem?
According to Catherine Mann, youth unemployment should not automatically be seen as a sign that the whole job market is in trouble. She said we should not treat young workers as the canary in the coal mine, meaning an early warning of a much deeper problem. The overall unemployment rate in the UK has risen from 3.9% to 5.1% over the same 3-year period. That is an increase, but it is not as dramatic as the jump for 18 to 24-year-olds. This suggests that something specific may be affecting young workers more than older ones. One reason could be the faster rise in their minimum wage compared to other groups. So while the labor market may be cooling slightly, it does not mean we are heading into a major crisis just because youth unemployment has gone up. It may be more about policy changes affecting one group more strongly than others.
Let's talk about fairness. Many young people argue that they deserve equal pay for equal work. In fact, the government wants to bring the minimum wage for 18 to 20 years old in line with older workers. Do you think this plan could help young workers, or could it make unemployment worse?
This is a difficult balance. On one hand, it seems fair that if two people are doing the same job, they should earn the same hourly wage, regardless of age. Young people face rising living costs too. Rent, transport, and food prices do not change based on your age. On the other hand, employers often see younger workers as less experienced. They may need more training and support. If the wage cost is the same as for an older, more experienced worker, some employers may choose the older person. If the minimum wage for 18 to 20-year-olds is raised to match older workers. It could improve incomes for those who are already employed. But it could also make it harder for some young people to get their first job. Policymakers will need to watch carefully and see whether the benefits outweigh the risks.
Catherine Mann has also been known for her strong stance on inflation and even voted against recent interest rate cuts. Does her view on youth unemployment connect to her broader concerns about inflation and the economy?
Yes, it does connect in a wider way. Catherine Mann previously worked as chief economist at the Organization for Economic Cooperation and Development, and she has been very focused on keeping inflation under control. When wages rise quickly, it can sometimes add pressure to prices. If businesses face higher wage costs, they may pass those costs on to customers by increasing prices. That can push inflation up. Her concern seems to be about balance. She wants to support workers, but she is also cautious about policies that might create inflation or reduce job opportunities. So her comments on youth unemployment are part of a bigger picture. She is looking at how wage policies, inflation, and employment all connect together in the wider economy.
Finally, let's bring this back to young people watching tonight. If you are 18 to 24 years and looking for work, what should you take from this situation? Should you be worried?
Young people should not panic, but they should stay informed and prepared. Yes, the unemployment rate for 18 to 24-year-olds has risen to 13.7%, which is higher than it was 3 years ago. That means competition for jobs may be tougher. However, there are still opportunities. Employers value skills, reliability, and flexibility. Gaining work experience, building new skills, and being open to different types of roles can make a big difference. At the same time, it is important for young people to understand that economic policies can affect the job market. Wages, interest rate rates, and business costs all play a role. This is not just about one number. It is about how different parts of the economy connect. So while the job market may be more challenging right now, preparation and persistence still matter a lot.
We looked at a complex issue. Minimum wages for young workers have risen sharply, and youth unemployment has also increased. Catherine Mann from the Bank of England believes the two are connected, but she does not see it as a sign of a major economic downturn. The debate now is about balance. How do we make sure young people are paid fairly while also making sure they have real job opportunities? As always, the economy is not black and white. It is about trade offs, choices, and long term thinking. We'll continue to follow this story and bring you a clear and simple explanation so you can understand what it's meant for you and your family. Thanks for watching, and we'll see you again in the next program.